months.
4 months. Okay, so I'm right. So 120 days for you. Those of you like me, you need the months. 4 months.
Yeah, and sometimes it just takes that long too to find a house. I mean, depending on what kind of market it is going on, or if it's in the winter time or the springtime. But I mean, sometimes that 4 months really is what's needed. And we can always, once it expires after the 4 months or 120 days, we can always re-pull the credit report and get you active again. If you need an updated pre-approval letter or something like that, we can always do that option for you too. So
yeah, absolutely. That credit pool on if I don't get it in the first 4 months, is that going to be another hard credit pool, Tony?
it would be. Yeah, unfortunately it would be. But I mean, after 4 months, I mean, it really shouldn't affect your credit scores. I mean, it's a common myth that's out there that, if I have a lender pull my credit report, once every 4 months, it's going to drag down my score a lot. But it really doesn't. I mean, if you're having, multiple lenders pull your credit report within a 30-day period, then it might drop it a little bit, but it's not going to be, 50 or 100 points.
Got it. All right. That's a really good question. I believe if you're doing a joint application, we're going to pull the credit for both of you and use the middle lower score out of those two credit pools. Would I be correct in that, Tony?
Right.
Mentioned that, does that sound about right?
Yep.
So both of you will have
Yep.
your credit score pool, but again, the person with the lowest score and their middle score from those three credit bureaus, they definitely want to have the 720. If you're trying to do like the first time home buyer, you want to make sure that, both of you are in that 720 range, hopefully so, because we're going to go with the lowest score.
Absolutely. In the previous slides, we talked about Experian, TransUnion, and Equifax. So those are the three credit scores that Chris is mentioning. So once we pull all of those, I mean, depending on which one of those products that you want to go with, hopefully we can get you into something. So as long as both of you have a 620 credit score or higher, we should be able to do a mortgage loan for you. There's a lot of confusion out there with the credit scores because some people will go, out to third-party websites, but those third-party companies might have different calculations with that graph that you showed and the different percentages that they use for like credit history or length of credit or something like that. So those third-party companies, if you're getting your credit score from those third-party companies, they might be a different score than when we actually pull it directly from the credit bureaus. So, it might show on, one of those websites that you have a 700 credit score, and then when we pull it, it could be a 650. So again, we have to pull directly from TransUnion, Equifax, and Experian. So just be sure that, you're getting the right resources from when you're looking at your credit scores in particular.
That's another good question. If it's safe to say that, hey, I know for sure that, hey, I'm not at that 620 mark, I'm a few points away, or I'm like maybe 30 to 40 points away or so, I would say definitely maybe want to hold off, continue to keep your ear to the ground and, preparing yourself. But in that preparing, use the website that we gave you, the annualcreditreport.com, as well as those other features that you can use to look at your credit score and see what things you can either dispute, see what balances that you have on some cards and things like that you can pay down to maybe get some debts paid down to help you move forward. We will always work with you as loan officers as best as possible. So we would work with you on, hey, this is something that you have in your credit report. Maybe you can kind of, pay this off. Maybe we can do this and try to point you in that right direction. But yeah, for sure, with the 620, it is going to be pretty tough for us to, see what options that we can do for you. What about you, Tony? What do you think of that?
Absolutely, Chris. No, you're exactly right. I mean, I think that, with the applications, if we do see it, I mean, like Chris said, we can definitely give tips and just give some kind of idea of what's out there on your credit report to say, okay, it's just some late pays that you've got, that were, 2 months or 3 months ago. So get back on track on making those payments, and hopefully that score comes up above a 620 within the next 2 or 3 months. And we can also go over the credit report with you too, and just say, hey, there's some, foreclosure that's out here or bankruptcy. We can go over those time frames as well, with those heavier items that are out there. But yeah, definitely contact either a mortgage loan officer or that Green Path too, to help get you to your financial goals that you're looking to. Definitely you'll want to save enough money, for the purchase price, for the down payment, the closing costs, and the escrows, but also think about after you move into the house as well. So some people want to have kind of a nest egg type thing to where they want to have 2 or 3 months worth of reserves in that savings account. Some people are going to be moving from an apartment, a 1-bedroom apartment, to a 3-bedroom house. So they're going to have to fill those other bedrooms, or maybe you're going to have a basement in your next house that you're going to need to have another, set of furniture, another couch or another entertainment center or TV. So you want to think about those kind of things as well. Another thing that came to mind is lawn equipment. So if you're one of those people that's in an apartment right now and you're going to be moving to a house, you're going to have somebody cut the grass and weed eat and stuff like that. So you're definitely going to want to, consider those dollars in the stuff that you're saving as well now, to be able to go ahead and figure out how much that you're going to need to save. But it's really up to everybody individually on what you feel most comfortable with and what you want to go with.
When you're looking into your savings, you just kind of want to look and see, okay, cool. After we have passed closing and paying those closing costs, will we have funds for, the next few months just for food and maintenance in the home, things like that,
Right.
and paying your bills. So I think you hit everything on that one. One, there's an option for the purchase of the home that we can definitely help you with that loan. But Tony, correct me if I'm wrong, the construction loan is something that we don't offer at this time at the credit union.
Right. Yeah, we'll be able to do the loan for the purchase, but any money that's needed after that is going to be probably a construction loan that you would need. So they do have the 203B loans that are out there for construction loans. So if it's a home that's maybe a foreclosure home, or some kind of house that's missing the bathroom or kitchen, or doesn't have doors or windows on the property, you might want to look into construction loans. That, again, you're right, Chris, we unfortunately don't offer those 203B loans at this time, but that might be something that you would want to look into. And after you purchase the home, if it's move-in ready, on day one, and it just needs an update on the kitchen or an update on the carpet or flooring or something like that, we can still do the loan on our side here with the credit union. And then after you move in, then after 6 months, you'll be able to do a home equity loan, depending on what your down payment is. So those are some options that you'll have, but initially right off the bat, you wouldn't be able to get the money to fix up those things unless you do that construction loan. Each one of those adjustable rate mortgage programs are based on a 30-year term. It's just when the interest rate will adjust. So for the 7-1, again, it's the first 7 years of that loan, the rate that we can lock you in at would be fixed for the first 7 years. And then on your anniversary date in year 8, that's when your rate will start adjusting based on whatever the market is at that time. So the 10-1 arm, the first 10 years, the rate is fixed. And then again, each year after that, then it'll be adjusting. So the benefit to those is that if this is something that might be like a short-term purchase for you, that, if you know that, hey, this is just my first house that I'm buying, and I know that I'm going to grow out of this house within the first 7 years, or you can refinance it too. You don't have to stay in those adjustable rate programs for very long term. You can utilize the 7-1 adjustable rate mortgage on that first time homebuyers product in order for you to purchase the home with no down payment, because that's a huge savings to not have to put that 3% down. So with that adjustable rate mortgage program, you could certainly purchase the house, and then 3 or 5 years later, you could refinance that house into a 30-year fixed, and then you can do a 95%, because hopefully within that 3 to 5 years, the home's value will have gone up, as well as you'll have been paying down on the mortgage for 3 to 5 years. And so there will be some equity that's built up in there. So by going with that 100% financing, you'll be able to get into the house without a down payment, and you'll be able to have a lower interest rate. So if you wanted to do the conventional loans to where you got the 3% minimum down payment or more, you can do those adjustable rate mortgages, because typically, if you look at on our website, you can see the difference between the adjustable rate mortgage rates and the fixed mortgage rates. So the adjustable rate mortgage rates are typically lower. So that's the benefit to going with one of those adjustable rate mortgages. So if you know that, and it's kind of a gamble too, right? So if you think that the rates are going to be lower in 7 years, so you're kind of saying, okay, I'm going to do the adjustable rate mortgage, but for the first 7 years, I'm just going to go ahead and, plan on my fixed rate, and then hope that the market goes down and those rates are lower in year 8 whenever my rate starts to adjust. So then you'll have that lower interest rate as well. If you are doing something like, again, I mentioned this earlier, but with the first-time home buyer, if you're purchasing a home and you're saying, hey, this is just kind of a temporary home, and I know that I'm going to grow out of this house and buy a bigger house, maybe that you got a serious girlfriend or boyfriend, and you'll be getting married and having kids in the next 3 to 5 years or 7 years or whatever it may be, and that you're just buying this house for now to buy a house, and then you'll buy a larger house within another 3 to 5 years or 7 years or whatever it may be, you can use one of those adjustable rate mortgages, take advantage of the lower rate, and then purchase your next house and do a 30-year conventional on that one. And again, the fixed rates are, just that. So we've got 10, 15, 20, and 30-year terms on that. So on those, of course, the rate is locked and fixed for that entire duration. Typically, it's only for a single-family home. So if you are buying a condo or a townhouse or something like that, there is a minimum of 5% that's required on those. So the 100% is only for the single family owner occupied home. So no investment properties or anything like that. So yeah, if you're doing a single family home, then it is 100% financing. If you're doing a condo or a townhouse, then it is a 5% down payment required on those.
From my experience, just for me personally, I would answer that and say I haven't seen appraisals lowered in any case, as far as what I've seen. In this market, yes, there are a lot of back and forth for the bidding on it and saying how much the home is going to be sold for. But as far as the appraisal goes on the home, those are usually, if I can say, probably a little bit higher, maybe a little bit lately. But in general, the appraisal doesn't affect that with that bidding war. Usually the appraiser goes out and this is how much the home is appraised for. The seller will say, hey, this is the amount or so, and then somebody may offer them a little bit more than what they're asking for on that asking price. Tony, how about you and your experience? Anything?
Yeah, the only thing that I would really add to that, would be just be cautious, because if you are going to be offering a seller over and above what the asking price is, we'll be able to do the appraisal to say, okay, this is what the home's value is. So if you offer $250 on the purchase price and the appraisal comes in at $240, then you're going to have to either renegotiate with the seller of the home down to $240 or $245, and you guys split the difference or something. But everything that we go by is going to be by that appraised value. So we would go by the $240 mark, which is what the appraised value is. And then you guys would have to either negotiate or bring that extra cash in over and above whatever the appraisal is marked at. So yeah, I mean, we do see, sometimes with the appraisals that come in, we've got to kind of renegotiate or make some changes in the loan, because in this market, it's definitely a seller's market right now. So there's a lot of different, deals being made as far as, people offering to pay the realtor commission, or, sometimes they'll offer more cash, or, a short closing date or something like that. So, just talk with your lender anytime that you're going to get into a contract like that, and then say, hey, this is the kind of offer that we want to make to the sellers. How will that affect my loan? So as long as you're staying in communication with your mortgage loan officer, you should be able to work with them, and we can let you know and say, okay, this is something that you would be able to do based on your application, or based on your assets that you have, or your income or debt ratios, whatever it kind of affects on your loan, and then we can take a look at it.
My best tip to answer that is be patient. I definitely would advise not to rush. Yes, it is a tough market because of what's going on. There's a lot of offers being placed on homes, but definitely I would say, just from my own experience, I would say be patient. The right one will come along with that. But that's the best answer I can give on that.
It is a tough market out there too. It really is. I've heard several stories, from different people that are out there in the market making an offer on a house, and then they find out that the seller's got 10 other offers as well that same day. So, that's, again, we'll go back to the Home Advantage, that MLS website that we talked about earlier, because once the house goes on the market, it's immediately put on that MLS site. So if you're out there on Zillow or Redfin or any of the other sites that are out there, they take a day or two for the home to come onto that website. So the MLS site is a big perk for you guys as buyers, to be able to see when a home comes on the market. You can set your filters, if you want a certain zip code or a certain number of bedrooms and bathrooms, you can certainly go on and, set those filters, and then it'll send you an alert anytime that a house comes on the market. So I've also heard things like people are writing letters to the sellers of why they want the house. If it's a bigger house for you and your spouse and your two kids to move into, or if it's in the school district that you want your kids to go to, or if you love the backyard or the kitchen's amazing, or if your parents live right down the street, or any kind of things that you can write in that letter to describe why you want their house so bad. That's another tip that I would throw out there. One thing that I would caution on, that I've seen on some contracts that are coming in, is that they're waiving inspections on the house. So be cautious of that, because you might find that there's foundation issues, or that there's sewer pipe damage or something like that. But if you waive inspections, then unfortunately anything that comes in, if you do the inspections, because after you buy that house, it's your problem, so you might have to put up some money to purchase the home. So I wouldn't recommend waiving inspections. Usually another thing is with closing dates. Typically the process takes 30 days for you to close. If you're going to put in an offer that you want to close in 25 days or 28 days, and be under that 30-day mark, be sure to talk to your lender and let them know that. That's another thing that you can make in an offer, but just be sure to talk with your realtor and your lender, and just work real close with them to ensure that you get all the documents signed and get all your paperwork in, so that we can start ordering your appraisal and title work right away.
Yeah, to bounce on the Home Advantage, answering this question, definitely take advantage of the Home Advantage program, because there are some very experienced realtors out there. And in this market, since it is difficult, you want to have a really good realtor as well, someone who knows what's going on and knows how to maybe help you put in an offer that can put you in better placement to get that home that you're looking for. A lot of those realtors in that program will work with you and let you know, okay, this is what you need, and this is how soon we need to put the offer in, and things like that. Especially if they are, in your area, they will know, maybe a couple other realtors or anything like that to help you build that connection with the seller to get that home. So definitely take advantage of the Home Advantage real estate agents that we have listed there. Well, everyone, thank you so much for all the wonderful questions. We thank you for taking the time out to join me and Tony as we go through our home buying workshop. We appreciated the time.
Thank you guys very much for all your questions. It was great being with you today. And definitely let me or Chris know if you have any questions that we can help you with.
Thank you all. Bye-bye.